There's this weird feeling in the air right now, isn't there? You hear headlines about the economy doing great, but for so many of us, especially younger people, the things that used to feel normal, like buying a house or even thinking about starting a family, they just feel completely out of reach. It's this massive disconnect between what we're told is happening and what's actually in our bank accounts. And this isn't just some abstract economic theory. It's incredibly personal. This comment from a Reddit user just says it all, right? It's not just about the money. It's about how the basic math of living has gotten so hard that we're putting these huge, life-changing decisions on ice. And it is definitely not just one person feeling this way. Look at this number. 84%. That is the staggering share of Gen Z who say they are actively delaying major life milestones just so they can try to save up for a house. This isn't just a trend. It's a full-blown generational crisis. So today, that's what we're going to break down. We're going to look at why this dream has become so unaffordable. We'll get into the data, the official response to all this, and the really high-stakes political battle over who actually gets to control our economic future. So let's start with the question that I think is on everybody's mind. Why does it feel like no matter how hard you work or how much you save, the goalposts for buying a home just keep moving further and further away? Well, the answer really comes down to a few key numbers. And here is the problem in a nutshell. Mortgage rates are expected to stay high, somewhere around 6%. And home prices, well, they aren't really expected to fall, just kind of flatline. This brutal combo of high borrowing costs and prices that won't budge is locking an entire generation out. Gen Z's share of homeownership is actually forecast to go down. Okay, so to understand how we got here, we have to talk about the most powerful economic institution on the planet, the U.S. Federal Reserve. Remember back in 2022 when inflation was just surging to 40-year highs? Well, the Fed stepped in and they served up some very, very bitter medicine. The Fed's main weapon is something called the federal funds rate. Now, don't let the name scare you. Just think of it like the master switch for the cost of money in the whole economy. When the Fed cranks that rate up, everything gets more expensive for you. Your mortgage, your car loan, your credit card bill. The goal was to slam the brakes on spending and get inflation under control. And they moved with unbelievable speed. This timeline just shows the whiplash, from basically 0 to over 5% in just a couple of years. This was an intentional, aggressive plan to cool the economy down. After a few little cuts in late 2025, they just hit the pause button at the start of 2026, leaving rates at a level that keeps squeezing all of us. And you have to understand, this was not an accident. Fed Chair Jerome Powell was crystal clear about the strategy way back in 2022. He literally stood up and warned everyone that fixing prices would bring some pain. And now, here in 2026, we can see exactly what that pain looks and feels like. And the consequences of that strategy, well, they've been massive. They've created this really strange, painful paralysis in the one market that pretty much defines wealth for most Americans: housing. This right here is the key idea you have to grasp. It's called the lock-in effect. Basically, you've got millions of homeowners who are sitting on these amazing 3% mortgages. Why on earth would they sell their home, only to turn around and buy a new one with a mortgage at 6 or 7%? The answer is they won't. So they're just not moving. And this is the insane paradox we're all living through. High interest rates were supposed to bring prices down, but because of that lock-in effect, nobody's selling, so the supply of homes has just vanished, and so prices have barely moved. It's the worst of both worlds for anyone trying to buy: sky-high prices and sky-high borrowing costs. So, what's the end result of all this? Well, the real estate company Redfin, they've started calling it the Great Housing Reset. That traditional path, get a job, get married, buy a house, it's crumbling. People are delaying everything, moving back home with their parents, because the simple math on owning a home just doesn't add up anymore. And all of this economic pain has, of course, created a massive political firestorm. Right in the middle of it is Fed Chair Jerome Powell. The one institution that's designed to be totally above politics has been dragged into a bare-knuckle brawl with the White House. President Trump's pressure campaign has been just relentless, and it's all been out in the open. It's just this escalating series of attacks, from calling the Fed chair a stupid person to directly threatening other leaders at the Fed. The goal is pretty obvious: bully the central bank into cutting interest rates faster to give the economy a boost. But then, in January of 2026, that pressure campaign took a shocking turn. the Department of Justice, the president's own law enforcement arm, launched a full-blown criminal investigation into Jerome Powell himself, serving the Federal Reserve with grand jury subpoenas. This was completely unprecedented.
Powell's response was, well, it was extraordinary for a Fed chair. He gave this rare public statement, and he basically called the whole investigation a sham, a pretext. He argued that this legal threat wasn't about what they claimed it was. He said it was direct retaliation because the Fed refused to cave to political demands.
And all of this, it brings us to a really crucial reflection. Because this isn't just about political drama. This is a fight over the fundamental rules of how the American economy works. And it has profound implications for all of our financial futures. See, on one side, you have this traditional model of an independent central bank. They make decisions based on data, trying to keep things stable for the long run. But on the other side, you have a model where economic policy is driven by short-term political wins, the desire to, as the president put it, turbocharge the economy, maybe right before an election, even if it means risking higher inflation later. And the stakes here, they couldn't be higher. We're talking about the credibility of the US dollar, the long-term health of our entire economy, and, to bring it all the way back to the beginning, your ability to plan for a future where the rules aren't being rewritten on a whim for political gain. So as we wrap this up, we're left with this really unsettling question. Because when we talk about interest rates, what we're really talking about is the cost of your money, the cost of your house, the cost of your life. And the question this whole conflict boils down to is a simple but profound one. Who do you trust to control the cost of your future? An independent institution that's guided by data, or political leaders guided by the next election?